My name is Liza Sherman. I run the Opportunity Youth Program here at Delgado. We're funded at $1.9 million for 3 years by the Conrad Hilton Foundation, which does Hilton hotels. And they fund us to help 16 to 24-year-olds enter healthcare and hospitality careers. My thought on what to do with this money is we want to spread it far and wide to impact as many students as possible on Delgado's campus, not just the about 300 who will go through our Opportunity Youth Program. And so that was kind of the inspiration for today. I keep on getting my students coming to me saying, Liza, I really want to know all the basics of how I can set myself up financially for the future. And they're young, they're like 18, 21, and they really want the information. And it took me, 20 years to get the information. I bought my first house, I think when I was maybe 25 years old, went into it completely blind, flooded in Katrina, and just kind of by happenstance, I made out okay. And I've learned through hard knocks like that, more just about setting myself up for retirement and all that. But it's hard to learn all this, and so we don't want people to learn through hard knocks. We thought, why not bring in someone who's trained and who knows all this stuff? So I ended up actually have my car loan through the organization that Mr. Sanchez here represents, OnPath Federal Credit Union. They're pretty much right around the corner. They're on Carrollton by Felipe's, but they're all over the city. And they're incredible. So I went around, I got quotes. Before I bought my car, I got 3 quotes. They were by far the best because community credit unions can loan money out at lower interest rates than regular banks because they're set up to drive economic stimulus in cities and also in lower income areas. And so I just reached out to them. I actually went in with a student of mine and we opened up a bank account with them and they told her all about building her credit score. They have a special program to help people improve and build their credit scores, and it was awesome. And so my student and I thought, we gotta bring this to more people. And so we reached out and we got Mr. Sanchez to come in. So he has been with OnPath. He started out as a teller. So he started out at the bottom and he's worked his way up to an assistant VP role, and he does all of this community outreach. So he goes out to K through 12 schools. He's here at Delgado today, clearly, and he's kind of trying to disseminate all of this financial knowledge throughout New Orleans in an effort to lift up people's financial lives and help them plan. So with no further ado, and I will say you guys are lucky because there are not that many people here today, and he has these 4 Starbucks cards that he's gonna do some sort of raffle with.
Yep.
So stay tuned for some great information. Feel free, this is super informal. Raise your hands if you have a question. Go grab a sandwich, go get lemonade, do your thing. So we're really glad you came.
Thank you. Thank you, Liza. And thank you, students. Like Liza said, my name is Javier. I've been with OnPath since 2010, and I started as a teller like everybody does, and I've worked my way up through the ranks of the credit union. So today we're going to present a really quick kind of fun program. Hopefully you'll get something out of it. I've got a couple little questions for you all, not major, just sort of kind of Q&A and sort of help you develop a better life pattern. And the reason being is I too was a student, and I signed up for everything in the world, and I got myself into a whole lot of trouble because I didn't have anybody helping me at that other end. So without further ado, today's our agenda. We're going to use, the first thing I always like to say is money's a tool. Some of you all do other things. Some of you have other passions that you do, things, maybe artwork and all those things, those implements that you use for that creation. Those are your tools. So if you're a writer, it's your textbook or your laptop and your pen. If you're a musician, it's your particular instrument. It's the reeds or the horns. And if you sew, then all those threads and fabric, those are your tools. So without your tools and the proper use of your tools, you're not going to get anywhere far and quick. So money's a tool. Try to remember that. We're going to define some terms, what accounts really are and what their names are. Why should I use them? And the most important thing, if you don't take anything away today except this phrase, it's going to serve you your whole life. If you don't tell your money what it needs to do, you'll be asking where it went. Okay? So first thing is that the first slide? Wait, what's the slide? So understanding the lingo. This is all the words that are associated with banking and finances. Lots of different words. lots of acronyms. It all it makes sense to me because I've been in the industry for a long time. It makes sense to anybody basically that has had to use something, right? But it is kind of confusing. There's lots going on. What does it mean? How does it affect me at the end of the day? So let's take the mystery out of some of these words. So what do these terms really mean? The first one is savings. That's a basic principle of putting money away for a rainy day or for some other aspect of your life. Checking is actually your transactional account. It means moving money between institutions back and forth without any restrictions. Available balance is the balance of everything prior to debits coming out. So when you go on your app, and if you're wherever you bank, make sure you're on your app every day looking at that balance, because the available balance is going to show you everything before all your debits, right? So it's showing the whole deposit amount. Your debit card is actually cash money, so be very mindful of it. Make sure that you're not leaving it out. You don't give your PIN number to anybody else, because here's a little fact. If you give your PIN number to somebody else and they use your card and they steal all kinds of money, you have no rights to anything. You gave them permission to take all the money out of your account. So if anybody says, hey, lend me your debit card, and you say, well, here, let me give you the PIN, that's your first flag. Never do that, right? Make sense? Yes? No? Maybe?
Yes.
Credit card is a card that is money, but you're buying on time. You pay interest on that money if you let that balance go month to month. Term loan means that it's a loan that you're borrowing money, like your student loans. There's a certain amount of time that you have to pay it back, certain amount of time before it starts asking for payments. A shared secure loan is a loan designed if you've gotten yourself into sort of financial problems and you need something to start over. This is a loan that's using your own cash inside an account that's pushed away that you don't have access to, and the bank or the institution will lend you the same amount of money in either a cash money loan or a credit card, but it's tied up. You cannot use it until you pay that out. Credit score is what we hear a lot about. Credit score is actually your credit worthiness to an institution or a lending body, a mortgage company. Anything that you want to do nowadays, they will pull your credit and they'll tell you, hey, we're going to pull your credit. And that's going to actually kind of prevent you from getting either the car you want or the house you want or some other part of your life if that score is very low, right? NSF means non-sufficient funds. So you'll see this on your checking account statement when you're trying to buy things that you don't have money for. So it just kicks it back and it does charge you. Now this charges you, depending on the institution, somewhere as low as $28, some go all the way to $35. So that's 35 times 35 times 35, right? You gotta be careful with that. Right to offset, if you owe the credit union or the bank money and you have other accounts that have positive balances in there, the institution can take money from that other account. So let's say you have an account with your significant other and there's positive money in there. Since you're a joint, they can reach into that account to make that other account positive. So that's something you want to be very, very mindful. Fraud is when something's happened to your account unbeknownst to you with either a Cash App, which is really, really terrible for you because Cash App is just filled with fraud, or anything like that. If you're going to move money around, make sure you use Zelle. That's the best one you can. The rest are a little dicey and tricky. A payday loan is a loan. When you are working, you can get cash money in advance on monies that you are going to make. It is a loan designed to keep you in debt. The interest rate starts at 42%, it goes all the way up to 100. And they keep floating that note so you can they can tell you, hey, for this month, you may owe them $1,000, but you can only pay, if you want to pay us $20, you're welcome to, and they'll just add a whole new interest point to the end of that loan. So you will never get out of that loan. It's a terrible thing to do. Be very mindful and be very much cognizant of when you're signing up for a payday loan. Making sense? Yep. So what is this? This is a check, right? For you, younger people, this doesn't mean anything to you anymore. You don't see these unless you get paid by a company that's a very small company to give you a paycheck. But some things that you need to know about this particular vehicle, it's cash. So when you look at the top line, it'll be you, if you wrote this check, if it's me, it'll be Javier at where I live and whatever. And pay to the order would be you or someone else. It's gotta be dated, it's gotta have the institutional, and the bottom line here, I have a pointer, this line here of numbers is called the micro or the micro line. That tells the computer where it came from, what account number it is. That's cash, so you have to be very, very careful with it. That's the easiest vehicle to fake. Nowadays with the computer, you can print that off at home and present it to your bank, and it's going to be taken in. And if it does become fraud, they hold that money back out, right? So all these companies that say, hey, do you want to work for me? We'll give you a check for $1,000 if you call 20 people. That's a lot of fraud, right? So you got to be careful with that. Make sense? Yep. Easy? That's an easy one, right? This is also money. This is your debit card. So like we touched on before, debit cards give you the access to money in your account immediately. That's cash money that pulls out instantly, except for a gas station. So if you're trying to go to a gas station, they usually put a freeze on your account. It actually, what it does, it sends a beat to the account to make sure there's at least $100 in there, and it kind of freezes that money for a bit. So you want to be sure that you're not doing that and doing a whole bunch of other things, because that's when you go to the negative account, because that money is in suspension. Does that make sense? Yeah? Ask questions, yo. No? So far so good? That's good, okay? This is a credit card. Credit cards allow, give you the money now, and then you pay back later. So credit card's the best thing to have when you travel, especially for us here in South Louisiana. If we have to evacuate for a storm, you really need a credit card, because you can't do anything on the other end of where you get there. You needed to rent a car, you needed to rent a hotel room, certainly book a flight and a hotel. So you want to make sure that if you can get one, get one. You can always be very you can always ask the institution to give you a low limit to start, so that you're not using it and abusing it. Credit cards are sort of the second level of what you start doing, saving money, and sort of have a better grasp on your finances.
I have a question.
Sure.
So what are the points that you would look at to know what is a good credit card and what is not? You look at the annual percentage?
Annual percentage rate, right. The best tool you all have now, and the greatest thing about being young today is you have tools that we didn't have growing up, right? So you can go onto NerdWallet and sort of fill in their platform, and they'll tell you what is the best for you. You have your parameters, you set in your parameters, but you want to look at something that's free for you. That means there's no yearly fee on that. You want to make sure that the interest rate does not max out 18%. A lot of credit cards will give you a temporary 6% or a 0%, and then in 20 or 30 days or a year it goes up to 29 or 49 or 59%. So you want to be very, very conscious of that. Does that make sense? Yes. Good question. 18%. So it's like whatever you buy or that balance, it's 18% of that always. Yeah. So 18%. Whatever you buy, it's going to charge you 18% on top of that monthly. Right? Yep. Makes sense.
If the balance sits, if you pay it off, then.
If you pay it off, you won't pay any interest. You'll just keep using it like cash money. That's when you can be very, very disciplined with your credit, right? The best thing in the world to use is 30% of whatever your available balance is. And try not to exceed that, because that's going to build your credit score, give you a good baseline. Yes, sir?
My question is, I've heard that, like I have a credit card account for one, and I was told that as long as I pay, like even if I max my credit card out, as long as I pay it back before the date where it means, I guess, how much money you spend, it doesn't matter. Is that true?
Well, yes and no. If you have, with your credit card at any institution, if you pay, like everything is 30 days behind. So we're in February, so whatever I'm charging in February, I'll get billed for in March. So whatever you spend here, when that bill comes, if you can pay for it in full, that balance in total, then you won't be charged any fees. But if you carry some over, that's going to get charged for you. Did that make sense? Cool. Yeah. Great question.
When you say 30% of a credit card, what does that mean? Like, if I get a loan for $100, you suggest to only spend $60 on that credit card?
Yep.
Oh, okay.
That's to help what you want to do is making sure that's when you're trying to build your credit, you want to keep that capacity high, right? You want to show the lenders, like what we look at is not only your credit worthiness, is how you're using your credit cards. Are you maxing them out? Are you riding them right on that rim? Or are you using them, charge it up, and then pay it back down? How do you use it? Because that shows us how you really pay your bills. Your credit score isn't the only thing that we look at. We look at kind of, there's a whole spectrum of things. Did that clear that up? Great. So here's a question. Well, no, this is the wrong slide. So loans are money from your bank or your credit union. This slide's got messed up, sorry y'all. So what about loans? So we just started talking about some of the loans. So there's different types of loans. These are the basic ones that you're gonna hear out there, right? So a personal or signature loan is a loan that starts at 6 months payback and go up to 10 or 12 years, depending on the actual amount you borrow. It is only based on your credit score, right? So a shared secure loan is the same kind of a loan, but a shared secure is where we're using your own money to borrow for you. So, well, that didn't come out right, sorry. We're using your money to lend you money or lend you a credit card. So it's locked up money for whatever term you choose, okay? A business loan is a loan with higher amounts with different terms, rates, paybacks, etc. A business loan is always going to be at a lower percentage rate than an ordinary loan or a consumer loan. They're used for high ticket items, equipment, expansion, property, or to buy a new franchise. So those parameters are a little bit different. You have to have your personal financial statement done and in order, and you always have to have 2 years of taxes done and filed. So you cannot go more than 1 year without filing taxes to get a business loan. There's nobody that'll lend you that money. A mortgage, yes?
How do you go by anything personal? What did you say?
A personal financial statement. So for a business, if you own that business, your personal finances are actually what make that business, right? Your business may be making its own money, but it's not everything of the business. Your finances, your credit worthiness is what helps give us the ability to lend you money. So if you're selling cupcakes on the side and you get so big that, hey, I can do a little storefront, you're going to do taxes for the cupcake stand and you're going to do taxes for your own self. So depending on how you have your business structured, as an LLC or as a S Corp or a full corporation, you're going to do taxes on the cupcake shop, and then you're going to do taxes on your own. And then when you go get a loan for the cupcake shop, you're going to have taxes for that, and your personal taxes have to go in there. And that personal tax package is going to have a personal financial statement and a P&L, which is a profit and loss statement. So whatever monies that you're making from the money that you're feeding back to yourself, that's got to show, right? Right?
I mean,
That's kind of complicated.
Because when I went in with my student, she has a little side business. She makes fancy and pralines.
Yep.
But she didn't incorporate the business. She just gets the money herself. It's, kind of under the table. But and she couldn't get a business loan, right? Because she didn't have the employer identification number
Right.
that you have to get from the state. Like when you do your business, you could either be doing like babysitting or have your own thing going, and then that you can't really get a loan on, right?
That's correct.
Because it's not a business. But you have to have an employer identification number to get the
Right,
business.
and that's really easy to get. Right. Most big businesses like that start off with just selling to people you know, and then at one point you're gonna see that, hey, I'm making so much money doing this, I need to make this a real business. So then you apply for your employee tax identification number, so your business is paying taxes, and then your business can pay you, right? And legally, when you own your own business, you can take a loss for 5 years through the government and still considered okay. But after that 5th year, if you're not making any money, no one's gonna lend you money, because it's like, you've been in business for 5 years, you're not making any money, why am I gonna lend you money, right? Make sense? Good question, huh? So should I take out a student loan? Y'all are right here, and should you, should not? I think Like I said, we've all been here, we were all students. I always tell my nieces and my nephews who are right in your age bracket, you should always ask yourself, do I need a loan at this moment in time, right? Do I really need this? Do I need to pay this semester, or do I have money for it? Can I afford this semester without a loan? Can I change anything about my circumstances? So this is where you can do you have a side hustle? Do you make jewelry? Do you make artwork? Can you sell artwork? Do you DJ? Do you cook? Anything like that? Can you pay for that? Can you pay for your semester that way? What are the interest rates? The average rate for a student loan is anywhere from 5.8% to 6.3%. And how long can I take to pay it back? Sometimes it's 20 years, right? You can keep floating. It depends on your study plan too. If you go to a very advanced degree, you get a second degree, you get your master's degree, that's gonna push you into that range of 20 plus years sometimes, right? And at one point, are they forgiven? So legally, if you keep your student loans through the ones that originally offered them, they do kind of evaporate, but it takes a long time. It's about 25 years down the road. So it does happen, doesn't happen very frequently, and everybody that I know sort of gets tired of paying that student loan, so they go to another institution and pull all those loans together, and then it negates that whole portal for you, right? Yeah. So what's the cost? When someone wants to become a medical doctor, they can expect to borrow $243,000 plus or minus per year. If somebody wants to be a teacher, it takes about $17,000 plus or minus. If somebody wants to be a plumber, it takes zero money a year because it's internship and you learn on the job, and then you become a plumber. And then if anybody knows a poor plumber, let me know, because I've never met a poor plumber, right? It's one of the businesses that actually make a lot of money, right? And what does an influencer borrow? Right now we're the year of the influencer, right? So what are they borrowing? Product, service, and time. And they don't always get that, right? It takes a lot to get to that level of social media where you're doing something. So it takes a lot of time. A lot of people are not very fond of influencers because they're not giving you there's no what's called an ROI, which is a return on investment. So back to savings. So why do I need a savings account? So it can help you reach your purchase goal. It does offer dividends, and dividends are what we call interest in the credit union world. Interest is money making that's making your money that's making a little bit of money on the end of the month, right? Can be used as collateral, so you can borrow against it and get a loan out of it. It will make money on its own. That's through compounded interest. It should be linked to your checking account for overdraft, so you're not stuck at the teller machine or at the gas station with no money, right? Is liquid, so you can pull it out for an emergency. And some banks do charge to have one. Capital One does charge you to have a savings account. We do not. Some other people do not as well. So it's kind of interesting. Does everybody have a savings account now? Yep. Good. So checking, what is a checking account? It's also known as a debit account or your debit card account. It's cash. It's used to make everyday purchases, like paying someone online, purchases, mostly paying online, paying your bills online. Will let your account go to the negative? Always, because there's an agreement that Visa has with every financial institution. If you don't have the money, they're going to pay for it anyway, right? Usually does not pay interest and can cost you monthly. Some checking accounts do cost you for the privilege of that. Some institutions cost you if you want to go talk to somebody. So those are all the things you have to look at when you're looking to get a financial institution, especially with a checking account. Credit cards. A credit card is a loan. It does cost you to use it. It may have hidden fees depending where you are, so read that paperwork if you can, or have them explain to it. Interest rates vary according to your credit score, so if your credit score is in the 5s or 4s, of course you're going to be paying the more interest and you're going to be a harder risk, or somebody may or may not give you the money for that. Can be used for cash advances. If you go to the ATM and use your credit card for cash money, that particular transaction is being billed at a different interest rate. So you want to make sure that that's a little bit that you want to do. Try not to do that. It does help you build your credit score, and you can't be denied for a card, even if you have great credit and money in the bank. It's not always a guarantee. So what do I need to do to be the CEO of me? So you should always have a healthy relationship with money, especially cash. Now, I'm Mexican American. My parents grew up where we did not know there was a whole thing about money. My parents never spoke about money. We didn't know there was money happening. We didn't know we were struggling. So that's my culture. So that's one of the reasons why I got in trouble, because I got to school and I'm like, what is this? You know, like, what is this bill? Like, I don't know what this is, right? So that's why I do this. Kind of a weird story, but that's why I do this. So always have a healthy relationship with money. Ask questions. Always have a savings account, just a little bit. Always have a checking and a debit account. You have to have a term loan. And think about saving for goals in short chunks or medium chunks, less than 4 years, and 5 years, which is a long-term goal. It just helps you save for bigger and better things if you think of it in small segments.
Peter, why do I need to have a term loan?
Well, a term loan is actually something that you need. A term loan is a car, right? Or some people need a term loan to buy a refrigerator or a washer and dryer. That's a term loan because it's going to be 36 months. So instead of just paying for it, if you can pay for it cash, then of course you can, but if you can't, you want to do something like that. Also, all the elements on here are what's going to help boost your credit score. The term loan, credit card, checking and savings account. Make sense? Okay. Did that answer your question? Yes?
What if you just got insufficient funds or not enough money to have a credit card?
I didn't understand your question.
What
Speak
if
up.
you don't have enough income to have a credit card?
That's a different, that's an A, B, C, D answer question, right? If you don't have enough income, so we have to look at what you're asking for, number one. Are you asking for too much? Because some credit cards, our credit cards start at $250. So depending on what you're asking for, you may be able to get into a credit card, or we can do a shared secured card for you. So we can get you to save up to $250, and then we can do a credit card for you at that point. So it's not always income related. I don't know who's telling you no, it's just straight away no. There's so many more ways to say, not yet, or not right now, or because of your situation, we need to go down this road, not this road. Make sense? And we can talk about that in a minute too, right? We can sidebar that.
I tried Capital One once. They give you like $200 just to start with, and the deposit is like $50 or something. Yeah, I don't remember the exact amount, but it was a really low deposit. So I'm just throwing it out.
Okay.
And
Yeah.
I'll tell you, this is like, one of the reasons why we partnered with the credit unions and the banks, because they're all about helping people
Right.
to build wealth. So they're looking for ways to tell you yes, and to help you towards a credit card, rather than just saying no, because we're not gonna make money on you. So they're set up to build wealth in the community. I don't work for them, I don't know that.
Right. Yeah. Capital One is, kind of, it's a big institution, so they have a lot of money. But with that, and having said that, they're so big that they really care about you as a person. Where we are a big institution. We are very liquid. We have lots of money. We loan a lot of money. But we want you to have the best life you can. So we're going to help you get to that point. So not to disparage what you said with Capital One, because it's a great institution, but they don't care about how your life is going to get better with the credit card, where we do. Okay?
Yeah, they're more hands-on.
Yeah. So a bank or a credit union, does anybody know if there's a difference? Is there a difference? Does anybody know? You do?
I don't know the difference, but I'm gonna make it.
Okay.
I like my credit union better than my bank.
Okay. So there's a Starbucks gift card for you, $10 gift card. So there is a really big difference, and it's pretty basic. A credit union board of directors who actually run the institution is a volunteer board. So they have an everyday job that they go to, and once a month they go meet as a collective and they guide the direction of the credit union So they're making sure that we're doing our due diligence. We're reporting to the NCUA, which is the National Credit Union Association, that we're doing everything we're supposed to be doing. We're reporting responsibly, right? A bank, on the other hand, that board of directors is a paid position. So how are they being paid? Right? So that's fees. You pay more fees, you pay more interest, you get denied more often, you have to apply, you have to get charged to apply for a loan. So those are the big differences. It's really the biggest difference. And the other difference is, like I said, a credit union is about people. We're collaborative. All the money that we get in goes back out to make loans, to offer lower interest rates on loans, and to offer higher dividend rates in our savings account. So that money constantly goes into like a shuffle to help other people, right? And like we said, we're always trying to say yes. So if your credit score is not where it needs to be, we're going to do whatever we can to get you to that next credit score so you can apply for a loan. We don't just say no and say too bad, it's that, right? We actually have an in-house program that if you're denied a loan, you automatically get put into our credit counseling team, and we look at what's going on, right? We look at your budget, we put you on the budget. Here's your money hole. Where's the money going that you think you have that you don't have, right? So that's the thing that we do, where a bank doesn't really do that, right? They say they do that, but we don't. They don't, right? Make sense? Yes? No? Yes? And don't forget, money habits are learned. Like I said, my parents did not say anything about money. So I had to learn those on myself by the hard way. Learn from your mistakes. Ask questions from the professionals. They want to help you, especially us. We want you to ask questions. We want you to get better at your money. It's okay if you're not sure about the details. Don't ever sign anything that you have not read in detail. Right? Don't let anybody say you can only do this today. I'm going to offer you this loan today, only today. That's your big flag to say, hey, back up, right? Think twice about co-signing. Does anybody know what a co-signer is? Yes? What is that?
Co-sign is like my credit is not, like when I went to get the apartment at my first college, they told me my credit was good, so I had to use my dad's credit in order for them to allow me to rent that apartment.
Okay,
And
so
if I messed up, or if I didn't pay the bill, and they couldn't get in contact with me, and they would affect his credit after everything was done.
right, not only does it affect the credit of the other person, here you go, it also makes that other person liable for that debt. So if you walk away, or if you have a friend that you're kind of friends with, and they say, hey Javier, I don't have enough credit to get this loan, but we've been friends for so many years, we're cool, we're tight, here, help me sign for my car, right? And you do it by good faith with your friends, and then they ghost, they're gone. So what's happening? They just stop paying the loan. So guess who's responsible for that loan? Javier is, right? And I helped them knowing that I wanted to help you, but I didn't have the money to do your loan and my loan. I didn't have enough of that, right? So think twice about co-signing. Start saving now. It's the easiest thing in the world to do. If anybody banks with us, you can do it easy with a Christmas Club saving, $5 away every couple of weeks, you're good to go. You have a little bit of money at the end of the year. And finally, be fearless and know your money, because money is what? Does anybody remember what? Then we have a little.
Money's a tool.
Yep.
In terms of money, we have no money.
And who doesn't love the minions? So who said money's a tool? Yay. Now I asked you to remember, if anything, I asked you to remember one particular phrase. So did you remember that phrase that we talked about earlier?
If you don't put your money to work for you, you lost your money.
Very good, right? If you don't tell your money what to do and where to go, you're going to be asking where it went, right? Does that make sense now? You hear all this stuff? Here you go. Yes, sir.
I hear a lot of people say that if you're saving your money, you're actually becoming poor because it doesn't outpace the rate of inflation. So at what point does leaving your money in your
slower than, let's say, Bitcoin or that Foxcoin, right? Which made a lot of money really, really quickly, but then you have a bunch of people that have no money now because they put it all in there. Your safest investment, there's two safe investments. One is real estate. So when you own your own home, that's a protector that's always going to be valuable. Doesn't really ever lose value. It's going to always gain value. So that's your first and should always be your primary biggest investment. And then your safety account. With us, once you make $250 in that account, then it starts earning dividends. And the higher the balance, the more dividends it pays. And then when you reach a certain level, then we want you to graduate up to a higher dividend rate product. So that higher balance, more money, continuing on and on and on. Right? Make sense?
So that's like compounds.
Compounded interest, exactly. So if you're young, right now, you start putting away $100 a month. By the time you're a dinosaur like me, you're going to have a good bit of money in there, right? For not doing nothing. Right? Make sense? Question? Other questions? That's a great question. IRA. IRAs, does everybody know what an IRA is? It's an individual retirement account. So you just go to the credit union or the bank and say, I want to open up my IRA. It costs $1,000 to open. Yep, and you have to leave it in there for a certain amount of time before it starts making any money, right? And if you break it in that cycle, you pay the financial institution, and you also pay Uncle Sam, right? An IRA is different than a CD. A CD, you both can be on a CD, or I can have somebody else on the CD with me. An IRA is only for that one individual. Okay? Yep.
What's the difference between a Roth IRA and a regular IRA?
So a Roth IRA is taxed before you get the money. So it's getting taxed when you make your deposit. A traditional is getting taxed when it comes out. So when you make 59.5, if you have a traditional IRA, that money's going to be taxed when it gets to you. And the IRA works in the opposite direction. It's getting taxed first. So when you start pulling your money out, which is at 59.5, then it'll be tax free.
If you're an heir and your parents that passed away, and they had an IRA, can you roll that over into like what do you call it, as a gift account where you don't get taxed?
No, it's going to have to go to succession because the primary owner is now deceased. So it has to be broken, and the new ownership will have to come through. So whoever's on that, brothers, sisters, dad, whatever, that has to be split up that way. And then you can take it and move it to wherever you need to go. Right? It's got to go through those channels. Good question.
But there are other things that you can
Yeah.
pass on, like real estate. So
Yeah.
you can gift, like I know my grandmother had a house in South Carolina, and she gifted little bits of the house, like every year. My aunt set it up for her because she was an accountant. So every year she could gift a little bit to her 7 kids, tax-free. And so then that reduced the taxes that they owed on it when she passed away.
Right. Yep.
Another question, situation. So recently I was laid off from my job, and the 401k. The question is, in your opinion, you being a financial advisor, do you think that it's better to leave the money there until I start, my next venture, my next job, or try to withdraw the money? And I was only there for a year.
Do you remember what your investment is in there? How much money you have in there? You're not vested, so the company that owns it is going to take away half or more than half. So, is it worth it to you?
It's not a lot of money. It's not more than like 1,000.
Yeah, then I would look at and break it, and then wait for your other new job. If you move it, if you leave it, then when you get to your new job, you'll have to have it transferred over. So then it just makes a transfer. That money will stay the same, but your new company will start funding into it. But with the 401k, you have to be vested when you get your whole amount. You'll only get a fraction of what they gave you, right? Right. So it's not all your money. It's going to be less than that. It's going to be your money. Correct. Make sense? Cool. Great question. Good question. Nothing? Nobody has any questions that they've always wanted to ask? I'm out, boo. I'll send some more. The next time we go to the class, I'll bring more gift cards. I promise, yeah.
3-part
Yeah.
series, so, this was just like the basics of it, and then we wanted to do one, like I have a student whose mom has this really cool story, and she was a single mom at like 17, and she ended up stumbling onto this Jefferson Parish program that's still there, that helps with down payment assistance and a low interest rate, and she owns her own house now. She ended up going back and getting a college degree, and she owns her house free and clear, and she has this like incredible story, and so we're hoping to maybe bring her in with the loan officer, because they still have this program, to speak on one, and then we were thinking maybe, like, I'll be interested, I'd like to send an email out to y'all and hear what you would like to hear, but we're thinking about maybe doing like a short documentary, something cool, you know, not boring, on finance and money and stuff, and then having a good conversation. But we were hoping, you know, that the Six Nations would come back for those and, you know, weigh in and stuff.
We have other experts for all of that too, yeah.
With the stars.
We'd love to do it, yeah. We love to talk, I personally, like I shared earlier, you know, I grew up in a household that we didn't talk about money, and I didn't realize that we were, right, really, it's like there were 4 of us, I didn't realize that. I got to it up. But that struggle that my parents gave me made me who I am today, right? So even though I came from a really bad place, I'm in a really good place, I'm very grateful to the education that I've had. I, you know, learned from my peers at the time. I asked those questions. Hey, I need to buy a house because I don't know where my money's going, right? Where's my money going? Somebody put a budget in front of my face and said, well, yeah, you're going to Starbucks 3 times a week, right? You're eating out lunch every day. That's a lot of money. You don't realize how much money we spend every day, right? Cool question, huh? Okay.
I don't know, you know, I was in here earlier and I heard some things. Just want to congratulate you on your birthday.
Oh, thank you. Thank you so much.
Is today your birthday?
No, it's yesterday.
Oh,
Yeah.
Happy belated birthday.
That's good. It's all the same. Well, thank you all. Do you have any closing?
no, this is so cool, y'all came. How'd you find out about the program? I know I've accosted some of you guys as you come.
Email.
Okay.
He told you?
Awesome.